The economy is weak. What is happening to the coins that are in the market? That it seems to be worth the risk. We've got a very dangerous situation here. Gold doesn't have that. Bitcoin is a very, very different beast. All I'm hearing every day from every contact is institutional money. And what's fascinating is once you look at the supply of Bitcoin, there's about 900 a day come onto the market from the mining. Most of that is being absorbed between Grayscale, PayPal, and Square. Now, at the rate PayPal and Square are growing, they're going to take the entire new supply out of the market. Against that, you then look at what is happening to the coins that are in the market. Well, they're coming off exchange. People are putting them into cold storage. So there is no supply. I have literally never seen a situation like this before where there is no supply coming into the market and demand is going up every day because institutions are coming in. So I think we're at the early stage of something that's potentially much bigger than any of us actually think. And that is almost a little bit terrifying. I've never seen a market with this supply and demand imbalance before. Institutional wall of money is not going into Ethereum yet. Ethereum has a whole bunch of other things, and the Ethereum 2.0 and the staking and taking coins off the market there. There's a lot of positives and the amount of development that's going on in the DeFi space. But the easy trade is follow the money. We get to front run a wall of money. Now with Ethereum, we don't know that that's coming. It has other things that will drive the economics, and the Bitcoin price rising is one of them. So Bitcoin itself is, and I've been talking about this, is basically eating every other asset class for lunch. It is outperforming everything. It's even outperforming Amazon now. So anybody who's running a portfolio that's discretionary, or even personal investors, high net worth, family offices, they're all looking at themselves thinking, why do I even own anything else? And that's the conclusion I got to almost, is why even bother? Because Bitcoin itself, yes, it's a very volatile asset. Yes, we're going to have 30 or 40% pullbacks, but you get compensated so well for the risk in terms of the reward you're getting from it, that it seems to be worth the risk, which is why I'm irresponsibly long. I mean, I own Ethereum too, but I own much less of it because the institutions don't know how to even think about Ethereum yet. They're just starting. And when you say digital gold, they kind of get it. But when you say a platform for programming smart contracts and decentralized finance and by the way, they're going to change the algorithm and it's done in a different way to Bitcoin, they're like, hold on, I can't understand Bitcoin yet. I need to get this past my trustees. So yes, it's a very important part of the ecosystem. I even believe it may end up with a larger market cap than Bitcoin. It's possible. But right now, we have to focus on what's actually happening. And Ethereum may well outperform. But the easier trade with the less volatility and the highest probability of success is Bitcoin. From what I know, and I know a lot of people in the industry, they are all onboarding institutional clients, family offices, endowments at an enormous pace. But 20,000 here is not the same as 20,000 back then. Back then it had gone up 100-fold when it got to 20,000. We haven't even started this yet. So later on, when things get speculative, we will see something similar potentially play out. But the difference is, again, and where these guys are getting it wrong, they're saying, well, people aren't as interested. Yeah, but the real money is interested, and that's a game changer. The economy is weak. So in that scenario, considering we didn't in the US get a stimulus package and Europe's been slow to get a stimulus package, the central banks step in first and eventually they pass some stimulus, but it won't be enough. If I'm right and the economy is worse than expected, we'll get a much bigger stimulus package and the central banks will underwrite that too. Then after that, we have me being wrong. Me being wrong is the vaccine gets rolled out in 1 quarter and we've add more stimulus. and the central banks keep stimulating. They've all got inflation targets that they want to overshoot, and we get inflation. Well, Bitcoin's going to do well in that too. So we've got both scenarios almost. I've literally never seen a setup like this, where you have almost both scenarios playing out, that it doesn't matter whether you get the macro call right or not, because both amount to the same thing. And that's really interesting. I think Bitcoin has more identities, and that's part of the unique feature. It has the identity of the future of the financial system too. It has the future of the accessibility of the central bank digital currencies. That's embedded in there. There's a lot of different narratives that apply to Bitcoin, and people will find their own narratives. However, the correlation narrative, I think, is a wrong one. And I've been pointing this out for a while. It was correlated to gold and then it wasn't. It was correlated to the dollar and then it wasn't. And I think it's correlated to the equity market and then it's not. I just don't think it's correlated. I think these are passing correlations that happen from time to time. The price of Bitcoin is not like the price of an equity, which is a P ratio and stuff. It's just a monetary number. So there is no excessively expensive, excessively cheap. It doesn't work that way. It's driven by flow and its future potential. There is no perfect model. So anybody who thinks there's some amazing engineer or mathematics guy who can disprove this, it's nonsense. What it is a hypothesis that needs testing. But let's assume plan B is an idiot. Everything was wrong. And it only goes to 140,000. Was he wrong? Or did you make a ton of money? Demand is based in Bitcoin on the network effect. Gold doesn't have that. Bitcoin is a very, very different beast. It's a distributed asset with a network effect. So that network effect means increasing demand over time. That's essentially why all networks have exponential curves. That is not gold. Generally, my guess is gold adoption was higher 100 years ago than it is now. So can that mean that people come into gold? Yeah, sure, I'm bullish gold. Does it have the network effect of Bitcoin, which has a potential future in the financial system itself, whether it's collateral or payment system or whatever ends up developing? Nothing else has that. Single equities have it, but you've never seen an asset with this before. It just didn't exist ever. We've never had an asset based around technology. Anything that has trust is the opposite of a speculative asset. A speculative asset is one that you buy and you want to sell to make money. A trust-based system is something that has intrinsic value. What is the intrinsic value? Human trust. Gold has zero value outside of trust. Yes, you can use gold for certain things, but there's plenty of other metals you can use in its place. There's very few single-use cases for gold, but it has human trust. Human trust is the most valuable thing of all. So what I'm noticing is that the predominant narrative is reflation, the narrative that you're talking about. So how does that manifest itself in markets? If that's correct, that Bitcoin goes up because it's the doom trade, well, then you wouldn't have the biggest ever short position in the history of US bond markets going on in the 30-year bond. Everybody's betting on reflation. It's 4 standard deviations short. That's a massive position. We see similar positioning all across the reflation trades. If we look at the US dollar, the market is almost record short the US dollar, and it's not gone down. And the bond market, bond yields haven't gone up. It's telling you that the narrative is possibly wrong. Now, the equity market does its own thing. It's much more driven by behavior, hopes and dreams, and all of that stuff. The bond market is the truth. It trades the economy much better. So, watch the bond market. If yields start falling, which I think they're going to do, then it is going to give a signal to the equity market that things aren't right. And I think that's to come. And I call it the winter of discontent. This period of no stimulus, central banks having to buy more bonds, and no change of government yet in the US until Biden administration comes in, nobody stopping the virus, people taking evasive action, staying at home, and governments in Europe shutting down. So we've got a very dangerous situation here. I know everybody thinks on this cycle the price will be lower. I just don't see it because the amount of money coming into the space. So I actually have a feeling it might be above his target. of about 250,000. But I don't know. But I like that optionality. You know, worst case 150, best case north of 250. I mean, find me another trade in the world that looks like this. All I'm trying to get expressed within this view is this is the biggest, best single bet I've ever seen in my career of every asset I've ever looked at.